Hello and welcome to the India Briefing. My name is Mukulika Banerjee. I'm in London and I'm joined by my co-host Pragya Tiwari in New Delhi. In this episode, we continue our coverage and analysis of the US indictment against India's biggest business tycoon, Gautam Adani. One of the world's richest men with business interests across key sectors around the world, Adani's rise has been meteoric, but mired in controversy. In this latest chapter, the U.S. Department of Justice and Securities and Exchange Commission have indicted him and filed a civil complaint against him and 7 others for an alleged scheme to bribe Indian officials, hiding the fact from U.S. investors and obstructing justice. The group has responded first by denying the charges and being dismissive. Eventually, they clarified that Gautam Adani himself faces less serious charges and that careless reporting and ill-conceived action on part of the US has cost the group $55 million in just 1 week. Now, Pragya, our first episode, we covered the first half of the story of what is happening in the US, didn't we? And we're going to take that forward this time.
Absolutely, Mukulika. In the first episode, for those of you who haven't heard it yet, we speak with Jerry Roth, who is a former prosecutor, federal prosecutor in the US. In fact, he was working in the very same office that has indicted Gautam Adani and others. And we spoke with Avi Singh, who is based in India and specializes in white-collar crimes that have cross-border implications and in transnational litigation. And we spoke to these legal experts to try and make sense of these charges, the way they're structured, why they've been brought, and what the implications might be. And what Jerry and Avi were so wonderfully able to do for us is give us the view from the US. In this episode, we're going to look at the domestic response that this has had. So we're going to try and break down how the government has responded, how the opposition is responding, and perhaps most importantly, how the markets are responding.
And we will have a guest speaking to us slightly later on. But before we bring him on, let us first look at the response of the Indian government itself. It is important to bear in mind that Mr. Adani is seen to be close to the Prime Minister Narendra Modi and the BJP, and his companies are behind the most significant infrastructure developments in the country at the moment, which is why the response of the government and the ruling party is critical in this particular story around Gautam Adani. Addressing a press conference in New Delhi on 21st November, BJP MP and National Party spokesperson for the BJP, Sambit Patra, said that the Adani Group will issue its own statement and that, quote, law will take its own course. But he also pointed to 4 non-BJP states with regard to Adani's investments and said none of them had a BJP chief minister. It's worth quoting his statement in full. He said, the 4 states involved, as per the documentation, are Chhattisgarh during Bhupesh Baghel's Congress government, Andhra Pradesh, alleged to have the most transactions during Jagmohan Reddy's YSRCP government, Tamil Nadu during M.K. Stalin's DMK government, and Odisha during the BJP government, unquote. Now, curiously, Sambit Patra forgot to mention Jammu and Kashmir, which was also named in the US indictment. During the period in question, that is 2021-2022, the Union Territory was being directly governed by the BJP-led Union government via the Lieutenant Governor. Similarly, Sambit Patra also ignored paragraph 70 of the US indictment, which noted the implied collusion of the central government-run Solar Energy Corporation of India, which helped the Adani Group obtain and revise, in quotes, internal SECI documents. So the central government is also implicated in the US charges, which, of course, the BJP spokesman has neglected to mention.
So yes, no probe announced by the government. Their approach has been hands-off. In a subsequent briefing, the Ministry of External Affairs also said that this is between a private individual, between the United States, private individual, private company. But in our previous episode, it was suggested that it might not just be proper, but also it might be incumbent, at least upon the state governments, to investigate these charges. Now, this is exactly what a lot of members of the opposition have been saying, particularly the leader of opposition in the lower house of the parliament, Rahul Gandhi. His Congress party and some other opposition parties have been accusing the government of shielding the Adani Group and demanding a joint parliamentary committee probe. In the recently held Maharashtra elections, Mukulika, as you might remember, one of the key opposition parties, Shiv Sena, which is the Uddhav Thackeray wing of Shiv Sena, their key spokesperson alleged that the results had been rigged by the BJP to support projects of the Adani Group and that the opposition has concerns over these projects. Now, these are unsubstantiated allegations, perhaps even irresponsible allegations, because no proof has been proffered. But I quote this only to give people a sense of how the battle lines, politically speaking, are drawn over this issue and how much the Adani Group and Gautam Adani himself is hyphenated with the Prime Minister and with the ruling BJP party. The winter session of the Parliament has been disrupted any number of times since it has started over this issue for the past couple of days, and the Indian Supreme Court has been petitioned for intervention and investigation as well.
And Pragya, the additional point is that, the fact that the ruling BJP is seen to be close to Mr. Adani, but the indictment itself from the US names state governments run by other parties, gives us a sense of just how widely the conglomerate's businesses spread across silos, across India, and how key Adani has become to the big story of infrastructure development in India. So this is one particular group we're talking about here, but actually the spread of the story, the implications of the story are pan-Indian. So what we promised our listeners we would do this time is really in this episode look at how the markets have responded to this story. And in order to understand this better, we are going to speak to Govindraj Ethiraj. Now, Govindraj Ethiraj is a television and print journalist and founder of data journalism and fact-checking initiatives such as India Spend and Boom Live, which other listeners may be familiar with. Previously, he has served as the editor of many prestigious media outlets, including as founder, editor-in-chief of Bloomberg India, TV India. He's a fellow of the Aspen Institute in Colorado, a McNulty Prize laureate, and a winner of the BMW Foundation Responsible Leadership Award. Currently, he runs a business news initiative called The Core and a fantastic podcast called The Core Report that has also been covering this issue. So let's listen to what he had to say on this matter.
Hello and welcome to the India Briefing, Govind. Thank you for joining us. The Adani Group has claimed that the allegations of bribery cost the group's listed companies a loss of 55 billion in market value. What we are hoping to do today with you is understand how and why this happened and what it really means. So I'm going to first start with the market response in India, and to my understanding, that has come in waves. There was some price fall when the news broke, and then there was some marginal recovery, and then it fell again in response to downgraded ratings by Modi. And then it seemed to be recovering again when there was some clarifications from the Adani Group about the nature and the seriousness of charges, etc. Could you give us a sense of the losses on the stock exchange to begin with?
So that's a very specific question, Pragya. So firstly, thank you very much for having me on your show. And I understand it's a new one, so I do wish you all the best as a fellow podcaster or wannabe podcaster. So I think, I mean, the stock price has been going down and then is back up. So I haven't worked out the exact numbers, but it's pretty clear that many of the stocks post that whole episode of those allegations by the US SEC have actually recovered considerably because of some various clarifications that have come from the company itself. So at this point, I don't know what the exact number is, but it's definitely up. but you also have to remember that the Adani stock prices have been quite volatile. I think that's something to maybe focus a little more, at least for people who are looking at stocks or companies to invest in. And when stocks are so volatile, it's usually not a good sign if you want to get in or get out, as the case may be.
We've spoken about this in the previous episode as well, that the US short seller Hindenburg had made allegations against the Adani Group last year. And one of the allegations was that there isn't enough transparency in terms of the holdings of the company, of how many stocks are actually publicly traded. Do you think that might have an impact? And of course, we don't really know to what extent those allegations are true or they're not. But do you think that that might have an impact on the volatility of the stocks as we see it, or we've been seeing it?
So those allegations came out in January 2023. So if you look at it now, it's almost 2 years. So I think the market has mostly digested and moved on since then. But the larger point does remain that there is some lack of visibility on who owns those shares overseas. And that was really what Hindenburg was trying to point out, that there is opacity. Now, what does that opacity mean? It means that, let's say, there are a bunch of companies who own the stock of the Indian company that's in India. But if that is tightly controlled, then obviously there is a liquidity problem. So the amount of free float is limited. So therefore, that tends to move prices up fast. And it also potentially reflects greater sense of control by the promoters, if that was the case here. Anyway, so Hindenburg was clearly referring to that. I think that issue continues to some extent, and I have written in the past that Adani should really come completely clean on this and try and point out and, in a way, lift the veil or the corporate veil on who all their investors are, where they are sitting, how are they holding those stocks, through which entities and through which vehicles. And that would pretty much put the matter to rest once for all, even if there is something wrong there. But in itself, I mean, this is not something new. I mean, many Indian companies or promoters hold stocks and their shares in India and have done so in the past. Usually, I've seen in the past that there is a transition phase where companies or promoters start by owning a large amount, and they realize that they have to be far more transparent in their ownership and accounting and so on, as they raise more capital, as they try and win the trust of investors in this market that's India. So usually there's a transition period, and then you reach a point where they are definitely more transparent than where they were. I think Adani still not reached that level of transparency which some of us would like to see, at least on this particular set of points that Hindenburg had raised.
Now, one of the things that's so clearly obvious is how important the Adani groups are when it comes to infrastructure development. They're handling so much of it in this country and some of it outside this country as well. What one also is keen to understand is how these charges might affect their medium-term outlook. We spoke about the markets, which are typically more sort of short-term reactions. But for example, when we're looking at them raising funding, raising capital for their ongoing projects, there has been speculation that that could be a problem because of the reputational damage caused by these charges. And again, very conflicting reports are coming in. The group itself seems fairly confident that, they will not be wanting for capital or for funding. There are funders outside that are reconsidering their commitment to them, while perhaps banks in India might be less conducive to not lending money to them. Could you help us make sense of this scenario? How important could this be for their projects and for the areas in which they are invested?
So, unlike maybe some other cases, the one thing about the Adani Group is that their businesses are real. And when I say real, I'm really contrasting it to, let's say, some edtech business or e-commerce business where, a lot of the value or potential value lies in a brand and in the perceived technology behind it. Adani is actually quite the opposite. I mean, most of their businesses, if you pass through Mumbai airport, you're passing through Adani property. If you pass through, let's say, at least 6 airports, if I'm not mistaken, in all in India now, you're passing through airport franchises which are now run or owned, as the case may be, in Bombay or Mumbai by Adani. The business that they started with is ports, and that's in Mundra in Gujarat, and that is by any stretch a successful and flourishing business because there is, let's say, there are goods flowing through that port. And then there is cement. Both assets, both their key assets in cement were actually acquired. One was Gujarat Ambuja or Ambuja Cement, and the other is ACC. Both are very old companies and have been around for a long time. So this is what Adani owns. So if you now extend that, all their businesses are physical businesses based on land, plant and machinery, and physical assets that you can see. So therefore, it's a little trickier to or maybe extrapolate some of these questions because someone might say that, okay, if I were to put money in Adani, what am I really, I mean, is my investment or is my loan to them secured? The answer could be that as long as there are assets and physical assets which are generating cash or seeing throughput of product or goods or traffic, as the case may be in an airport, there is, these are real businesses and there is obviously the potential or prospect of that money being returned. So I think that is really the issue that in some ways maybe people are not able to get their arm or fingers around, which is that if it's a real business, how do you make a projection on whether things are going to completely go down to zero? Because it can't. I mean, that's my sense. I mean, tomorrow if something were to severely go wrong, someone could always buy that asset and make it work again. That's not the case. So the problem, therefore, is a financial one. There are two kinds of financial problems. So one is, let's say, what we've talked about already, which is to do with the ownership of the shares of their own company and who owns them and where. The second is to do with the balance sheet itself and saying, okay, now are these entries genuine? Are they not? Have they diverted funds? Is there any question? Is there any evidence of wrongdoing at the balance sheet level? So now that's a very different question. And while there have been allegations, including by the Enforcement Directorate in the past, of diversion of funds and so on, because of overvaluation of imported equipments and machinery, but nothing has come out of it. And those assets that are there or were there continue to be there and continue to do business. So I think there are some financial issues for sure. I mean, we've all talked about them. The bribery is a different, I wouldn't call it a financial issue as such, but it's a different kind of issue, or it's a different kind of allegation. But I think on the main part, which is to do with whether there are underlying assets which are real, which are monetizable, which can be collateral if something were to go wrong. Clearly, that is the case.
Right. So so this is an important point because for people who might be funding these companies, this is going to be one thing that they are looking at. So while there is reputational damage, there are questions about the corporate governance and structure, the fact that they have real assets that people could fall behind, that it adds some value to their midterm and long-term outlook.
And comfort, as in, I mean, I'm not saying that there is no reputational damage. I mean, each time something like this happens, you have to answer questions. I mean, those questions may not be visible to us in the public, but obviously the big lenders and the big investors are going to call you and ask you. And you will have to respond to them, even if you don't respond to media or pesky journalists like us. You'll have to respond to them and say, why, what is the nature of this allegation? What is your position on it? What is the likelihood of this going to court, or if it were to go to fruition, what would happen then? So, and I'm sure that they're answering those questions, and which obviously does not make life very easy. And this is the third time effectively at this scale they're responding to things that have emerged in public domain, and this takes time, as in it takes up time, it takes up management time, it takes up bandwidth, it prevents you from looking at other things, and it delays things. I mean, they were going to be going out with a bond issue last week, which they've postponed now. So obviously that means that they have to, I'm sure they've postponed it willingly, but it obviously means that had they gone to the market trying to raise those funds as debt, they would have to first answer all these questions, pacify those investors, and then, and then investors can be, obviously, would want their pound of flesh. They'll say, okay, we'll give you the money, but then we're going to, maybe charge you higher interest than what we were charging earlier because our risk has increased. So all of this could be happening. I mean, I'm just guessing, but it's very likely because this is how these deals and transactions go through. So Adani clearly has a lot of questions to answer. And even if, like I said, they don't answer that in public domain, for sure they have to answer these questions when their investors, whether it's in debt or equity, ask them.
So a third aspect that's been in the media is, that some of their ongoing contracts have come under threat. So Kenya cancelled the contracts that they had with the Adani Group, and following that, Bangladesh and Sri Lanka have also, well, perhaps not following that, but simultaneously, Bangladesh and Sri Lanka have also said that they would like to review these contracts. Now, they have interest around the world. They have interest in Israel. They have interest in Australia, Tanzania, Bhutan, Bangladesh, Sri Lanka, you name it, any number of countries. Could this have a ripple effect? And how concerned would they be about this development?
When you say how concerned would they be, you mean these countries?
The Adani Group.
So, of course, I don't know how concerned they are, but I can confidently say is that they have to tackle this and grapple with it and, go point by point responding to various questions or concerns that may arise from any of these countries or any of these projects that are maybe underway. So you have to remember that in the infrastructure business, there are not that many players globally. If you look at, let's say, companies like GMR or GVK, GMR runs the Delhi airport and Hyderabad airport and the Goa airport. GVK used to run Mumbai and then they sold it to Adani. They used to run Bangalore as well, but they sold it to a consortium. So all these groups were infrastructure projects or companies. GMR, for example, was building an airport in Cebu in Philippines. It was also bidding for one of the terminals in Turkey, in Istanbul. So projects are, these are large projects which companies like these are always bidding for outside. I don't know whether how big the Kenya project specifically was, but I'm pretty sure, going by the scale of previous projects, that it's not something that is going to bring an end to anything. And companies or groups like the Adani with their expertise, let's say in infrastructure development or project execution, would move on to something else. And in any case, at any point of time, they would be bidding for multiple such projects all over the world. And like other conglomerates from India, like GMR and GVK, those are the names I can think of immediately. But there are others too. L&T, for instance, though it's not a family-owned company, but they too bid for such projects all the time. So I wouldn't place too much importance on a Kenya project, except that maybe there is a headline. It's headline material for sure, but I don't think that's a real balance sheet impact from what I can see, because projects are something that are being bid for all the time.
Makes sense. In the view of the slowdown in China, investors have been increasingly keen on India. And one of the things that we see happening on social media, sympathizers of the Adani Group, because of the way, the opposition parties tend to attack the Adani Group as a proxy for the ruling government and so on, and the way politics is played over this issue, sympathizers of the Adani Group, sympathizers of the government will make the sort of conflation between Adani and India, that an attack on Adani is an attack on India. It's an attack on India's growth story and so on. And this can lead to some confusion. And therefore, I wanted to ask you, in terms of India's economy currently, its markets currently, how much would a hit on the Adani Group of companies cost India as an economy today? In the short term as well as in the medium to long term?
Right. So I think there are two parts to this. I think one is the problems that Adani themselves face because of all the questions they will be asked, were asked, are being asked, and that we've talked about already. And the second is to say, are other companies and the economy as a whole facing problems or questions or whatever? I do think there are questions. It's even if, let's say, if I was another conglomerate who was also trying to raise funds overseas, I will surely be asked about the Adanis and what their role is in India in the context of government and proximity to government and so on. But I think one thing you have to remember is that India is an emerging market, like many other emerging markets. It is not unusual for large businesses to be close to the government, and maybe some are even closer than others. But the nature of the businesses they are in, which is really to do with, let's say, extractive industries, logistics, and energy, will willy-nilly mean that there is proximity to those who are in policy making, policymakers, politicians, and so on. And I think that applies to all companies. I don't think anyone could have, let's say, I'm not saying there was hanky-panky, but I'm not saying, I mean, I don't think anyone would have got, let's say, an airport contract without first building some kind of relationship to understand how things work and so on, So, I mean, and now you might look at it from outside and say, oh, that's proximity. I mean, maybe, I wouldn't think so. So, now, when we look at it from outside, I think most mature investors who are investing in India in whichever form over the years understand that distinction quite well. I think they understand also the distinction between, let's say, businesses which are in areas like this, which are energy, power, infrastructure, logistics, and so on, versus, let's say, consumer products. I mean, if you take, just to give you an almost wild example, if you take a company like Colgate or Hindustan Unilever, they've been around for now maybe 100 years in India. So you cannot say that these companies are going to relook at India investment. They're far more embedded in India than most others, including Indian companies. So the other thing is to say, okay, can this slow down infrastructure linked investment, which is a very specific question now. Yes, maybe for a short while, but no, because over the longer term, because the opportunity in India is still huge. If you look around the world, you talked about China slowing down, and it has, though things picked up a little bit after the sort of bottom the markets saw earlier this year. The opportunities to invest in a growth market are very limited in the world. And apart from the US, again, which has been doing very well, and the economy is growing, the stock markets are booming. But if you were to then take out these 2 or 3 examples or markets, then India is perhaps one or two, literally the handful of markets that you could potentially invest in. So, now, if it's an emerging market where there is potential and you want to invest, then these are things that you would take into account. And it's assumed that things will not be easy. In some industries where there is, let's say, tighter policy linkage, there will be more effort. There will be more placating of people in, let's say, government. But when I say government, I think the problem is everyone thinks federal or central. The actual hard work, whichever way you want to look at it, actually happens at the state level, because it's the state that gives you the land and eases up things and so on. Yeah, and again, I think if you look at industries like automotive, for example, you have almost all major auto manufacturers from the world, except for let's say someone like General Motors, who came and left, Ford, who came and left, I think 3 times, and is now back in India. And that tells you something about the opportunity in the market relative to anything else anywhere else in the world. So therefore, in the case of infrastructure or energy or gas or power, the challenges of doing business may be higher or more and more intricate in India, but I don't think it's an opportunity which people can avoid. And those who invest in India and have been investing in India for some time are very well aware of it. There is no two ways about that. They're very well aware of it. They're aware of the risks. They're aware of what it takes to do business here, because they know the returns at the end of the day are better than what they would get elsewhere, or pretty good.
So, last question for you, Govind, is that there were at least a couple of op-eds after these allegations were made public about how this could affect the reputation of sort of regulatory bodies, etc., in India. And I was wondering if you see that as a possibility. And of course, again, we're in the realm of speculation. And you did say that there are mature investors know this country and know its promises and its pitfalls quite clearly. But do you see that as this report causing some cause for concern when it comes to India's reputation on the whole, not just the Adani groups, but India's reputation on the whole as a market that people want to, for new investors in particular?
Are you talking about the latest allegations of corruption or the one
Both the
before
allegations
that?
of corruption, and when you compound them, say, with the second report of the short seller Hindenburg, in terms of them alleging that perhaps the regulatory bodies are not investigating as they
Yeah,
should.
I think the Securities and Exchange Board of India has not done the best job in the case of the Hindenburg report, the original Hindenburg report, the subsequent allegation that there was some proximity between the SEBI chairperson and a family member of the Adani group. So I think they definitely need to do much more. And in this case, I would have hoped that they would have done a much cleaner, deeper investigation, which subsequently they would have put out in public domain. Now that has not happened in the way at least I would feel comfortable and feel that okay, here is a regulator that's kind of going after everyone equally and so on. So question on the other side is now, does that cause discomfort amongst investors? I think it's a question people ask, but then people are also able to make out that even if they have not seen sufficient progress in Hindenburg, there are other cases where the regulator, whether it's the Securities and Exchange Board of India or the Reserve Bank of India, have been quite proactive and active. Whether it's in cracking down on shorts, on derivatives trading, or in the case of the Reserve Bank on lending to what we call unsecured lending, which is lending to making small loans with which people are buying things and then maybe investing in shares. And I mean, that's been a big problem in itself. So in these and other cases, the regulators have been fairly proactive and responsive. But in the case of Hindenburg, at least to me, they have not been what they should be or could be. So yes, that would be a question to people, but I suspect that somewhere that's also factored in, saying, okay, maybe SEBI is not being as responsive as we would like them to be, but at the same time, they've been okay on these counts. And the larger question always is the structural is our Indian market structurally stable? Yeah, and if I put my money in, am I confident that I can take it out if I were to be a foreign investor? Is the entire sort of, let's say, the depository structures. If I put in dollars and if I want to take out, how stable is the rupee? What is the Reserve Bank doing about it? I think those questions matter a lot, and people look at everything. And at the end of the day, like I said, this is an emerging market, and an emerging market, you have to take some bad and some good. So, and that's how you would invest, and you would look at it from outside. I think it's easy to say that, oh, people, look at all the headlines and then shut shop and go off. I mean, they don't do that. They've never done that, at least in all these years that I've been covering business.
Well, thank you for that insight, Govind. We will be following this story, particularly on your platform, The Core, and your wonderful podcast, The Core Report. Thanks once again for your time.
Thank you so much, Pragya, for having me.
So that's all we have on this developing story for now, but we'll be following it keenly because it speaks volumes about the markets, of course, but also about India's democracy, about diplomacy, and about India's position on the global stage. As always, if you like this episode, please do rate, share, and subscribe, and write to us on tib@oijo.in with your comments. Goodbye for now.
Goodbye.